Good morning, everyone. All right. So yesterday wound up as we believed it would, basically trading range day. More news coming, of course. More news come out this morning. Heard news Amazon going into the Dow, Uber going into the transports. These stocks change as these indices get, manipulated to stay up. Kicking out the losers and putting in the winners. Um, The other one in the news, HSBC. I mentioned yesterday about the China and news. I mean, there's always China news out there, right? China, 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 and about the financial situation there with the real estate and all that. I was surprised when I heard like it was whatever hundreds of times worse than what was happened here in the U.S. And so this stock HSBC is in the news, which I'm surprised it's not selling off worse, but you know, huge write off because of China, and you can see where it is, giant gap down. This is just one of the disasters or accidents that are happening out there today. Um, you see other gaps down and winners that stocks that have been winners. So wondering if a correction has begun to some extent. And one of the points I always make when we believe a correction is going to start is that, hey, a correction as it relates to the market may not really be a big deal. It's a beautiful uptrend. You see how strong it is. No, there's no pivots on the weekly chart. There's nice little pullbacks on the daily, and it goes higher. And so if we get some kind of retracement even down here, looking at the cues to the 400 level, you're like, not a big deal, right? And theoretically, since it's at new all-time highs, it'll go higher and all that. However, and one of the ways the manipulation is, okay, whether it's whatever the index is, they pull out one stock, stick Amazon in the Dow, take out this Walgreens, which has been a big dog, and it holds things together. Things not so bad. Market corrects whatever 5%. Buyers come in again, whatever it's going to be. But you get disasters like this, and if you owned it way down low, you say you sitting through earnings and what have you, and this thing's now gapping down a huge amount. So I always want to point that out. Like when we talk about the markets, you know, that's one thing to consider as far as corrections go. When you look at individual stocks, it can be much, much worse. Anyway, hedges, stop losses, of course, and this is what we deal with as professional investors and traders. Right? So we got FOMC minutes later today. Tonight we got NVIDIA. Going to be a monster. I mean, what can it do? It's got to go up, right? I don't know about that. It's up a lot, but pulling back anyway. Depending on how much it pulls back, institutions are going to be lurking down below to pick this up where it'll bottom out. It really doesn't have much support. So you see support down here. You got major support down there. They got a 600 level. Check out the options. Look at the open interest and see where there's an extremely large open interest. They usually at these whole numbers that tend to hold. So hey, and if it gaps up, we'll see which way that goes as well. All right, so broader markets. Just see where SPX is. These premiums. I'm sure they're lowering everything. A second here. We always do. We look and see where there's sufficient premium that won't get hit. And the vast majority of the times, I don't even get close based on the technicals and the strikes that we pick. So spiders, see where they're at. Held up relatively well. Financials held up relatively well. That was one of the comments yesterday. Financials need to hold it together. So clearly keep an eye on that. Not a big deal. This gap down near yesterday's low, not a big deal whatsoever. Uh, Getting news coming out, so little gap down there. Things may just whip around. Maybe they test down here, test up there. Then at 2 o'clock, we've got the FOMC minutes, and we'll see which way things go from there. Eventually, I can't wait till there's less focus on the Fed and interest rates. It always gets to the point where it's kind of sickening. You hear about it all the time and how it influences the markets. But, so far it just looks like a bit of a trading range starting to develop, pivot high here, pivot low, relatively close together. That tends to be your short-term lines in the sand to see whether it breaks here or whether it clears there. Any different guys speaking this morning? Okay, Patrick is letting me know different guys speaking. You never know what's going to come out of their mouth, of course. Sometimes, you have these guys speaking and nothing happens. Look, the market's on edge. Whether we look at the internal market gauges, we look at prices being extended from any support, the stocks that have been in favor, like that SCMI, or whether it's PanW. These accidents start happening, people get nervous, and they're ready to hit the eject button. So, and we all have to be. See where the levels are and what happens, what unfolds. So no big deal as far as this goes. I think by 2 o'clock it's better to get out of the way. So this has come down a bit to where there's enough premium to 05. It's gapping down here. Again, we'll see what happens at the open here and whether it's even worth considering doing these today at all. That is much better. Let me just see here, check that again. Yeah, 80 by 85. That's definitely doable. A little gap here. Again, see what happens in the first few minutes. But I like that. It's right on that bottoming tail bar and this little congestion right there. So little line of defense. Buyers will show up there. And at least this is on the other side of 5,000. So it's highly, I think, look, almost every day lately, if you chose to not pick one side or the other and do an iron condor, it's working because they don't touch either one. So being on the other side of 5,000, there's a big open interest there. There's an unfilled gap. You've got pretty strong lines of defense to protecting you. It's a good thing. Right. Interest rates, 10-year down a little bit, not a big deal. Just waiting for the news. It did break out. We were questioning here when it was going back and forth. We know what happened. Wide range bar up. IWM. The big concern is whether this holds here or not. It's a great pattern. Strong move, pull back to the 50, a retest with a higher low, move up. So all of this news, we look at the weekly chart, and what we've been talking about is, does this turn into an M top? And some things are shaping up just like that. But look, whatever happens here, my wish list would be for these to continue to show relative strength, and that would be an indication that the market's really okay. The market is. It doesn't mean individual stocks aren't getting trounced. And as you can see the transports and more of the M top. Will it break that pivot down there? But you've got a wide range bar reversal down. So, that's bearish. You see the depth of retracement here into this pivot low. And so as we look at these multiple time frames every day, that is a good segue into saying, get into MT Live today at 12 o'clock. They're all great. But this, multiple time frames was one of the, I use the expression, one of the biggest brain damage situations for myself to understand that. And when you say technical analysis is a bit of an art, understanding how to put multiple time frames together is a bit of an art. One of the keys is not to look at too many of them, and putting together your bias, how to use them. So um, yeah, get there. And you know what? At least register. You're going to get the recording. If you're going to lunch or what have you. Oil, we're waiting to see if it breaks out. Had a little peekaboo there and came right back in here. Yeah, Robert, you know what? I used to do the same thing, looking at too many time frames. And one of the reasons, and I'll probably say this during MT Live, was I got caught up in thinking specific patterns, which you say, well, why wouldn't you think specific patterns, Greg? Well, it was too detailed. I was looking for a specific bar or two bars. And I didn't understand the concept of retracements between bars and time frames. And so I got hung up in thinking I had to see a specific pattern. And when I didn't see it and I saw, the stock move, it was confusing. So I said, oh, I should be looking at the 3 minute, not the 5 minute, or, I should be looking at the 20 minute, not the 15 minute, and all of that. So it really became analysis paralysis. And, you those murky waters trying to get through all of that. And, what Dan and I do every week in these MT lives, I know they're priceless. Um, to get insights into that and not have to figure that out on your own can save yourself many, many years. All right. Bitcoin is extended, retracing a little bit. So coin coming down a little bit if you're looking at that. I think that, just based on this chart, yeah, it's extended. It's going to pull back unless it collapses for some unknown reason. There are going to be buyers under this. They're going to buy coin. They're going to buy anything related to Bitcoin because it looks great. And, for the longest time, we were talking down here, it's going nowhere, it's going nowhere, going nowhere. And then, it finally broke out. And it's got room to go up before it reaches these highs over here. So why not be looking to buy a pullback? Set an alert. Someone's telling me Newt on Twitter or wherever you're talking from there. 3, 12, 36 have the strongest signal. Well, if that works for you, fantastic. But I'll tell you, and this may sound unusual, it doesn't matter what time frames you use. It really doesn't. The trick is consistency, because whatever happens in the time frames that you are looking at, you will learn to interpret that. Now, is a 5 minute better than a 4 minute? I don't know. One day the 4 minute forms a picture, the next day the 5 minute forms a picture, but that will confuse the hell out of you. So just accept, like anything that we do, accept that nothing's going to be perfect, and learn how to interpret the timeframes that you use. So whatever works for you works. Just be consistent with it and you'll be fine. SMHs pulling back here, broke the pivot, this pivot. So everything's correcting here. We're going to see how far it goes. Do interest rates continue higher? The transports continue lower? And that's what we do here day to day. So it's going to be most likely a little choppy morning, spurts here and there like it was yesterday. Things will calm down around 2 o'clock. They'll get crazy again, and we'll all take it from there. All yours, Dan.
Good morning. Yeah, the media is going crazy over NVIDIA earnings. So there was one guy on made a couple of interesting fundamental facts, which to me, I'm not a fundamentalist, but they come into play when they're just like common sense. One of them was he said they have to grow their sale, either sales or earnings, I don't know which, by 10x for their PE to catch up with this. Do you remember a couple of years ago, the stupid media always will fill in the blank with a narrative to justify your behavior. And when prices were getting crazy, instead of just looking at, oh, look at the PE, they're like, well, it'll grow into it. It'll grow into that PE. I'm like, man, you spin doctors are just friggin' amazing. The shit you come up with to justify. So, I mean, that was one that shocked me a lot. And shoot, I forget the other one that he said. But anyway, I went and looked at the call premiums. I just posted them in Telegram, and they're insane. Greg, we could sell the $1,000 calls. Let me see here. I just posted the $1,000 calls are 90 cents. So that is just an insane amount of bullishness priced in. Now, remember, Craig, I wanted to get this as a core long on the weekly breakout here, kicking and screaming, woulda, coulda, shoulda. But I'd be selling in the strength. All right, let's go to earnings. There's a ton of gappers here. I don't have a single alarm going off on our open positions. We only did one earnings trade. Well, I only did one, and I only gave one. Said G. We did a Condor, 65 out of the money put spread, 110 out of the money call spread. And there's really no pattern, so all I did was call it way the heck out of the money. And I thought I was getting nervous. No chart. Oh shoot! Should have told me earlier. I clicked it. And Greg, there's a new something stupid here. Layout when I try to link. No, I linked it. Yeah, no, Greg says it's locked. Yeah, no, I linked it a second time and it's not moving. So yeah, hold on, folks. Greg's working on it. But let's continue anyway. If you'll just listen to me, because I don't want to slow down here.
Should be working now.
All right, let me try linking it again.
I see your charts.
I don't, which means there's some people in the room that don't either. Because we've been through this before. Some do and some don't. See?
Hmm.
All right, let me try turning it off. Stop share. And let's see if they'll give a bigger kick in the butt. There you go. That worked. Shutting it, disengaging. All right, cool. So anyway, so this one, so now we're $6 out of the money on the put side. I thought the put side was going to give us a little heartburn. So I'm just bidding 20 cents for the whole position to get out, be done with it. And if we're not filled, we'll manage it at the open and the strength. But now I'm 99% sure we're going to have an open profit. This sector getting whacked. No, I'm sorry, not T dot Pan W. Look at that, down $92. And this was a stellar sector. The cybersecurity hack and so forth. I wrote down a couple of them here at the bottom, but let's focus. I always need help at the open. I wrote down 5 of them, like I said, but let's watch the top whatever 15 of them. Not to short, but for stabilization, for counter trend moves. I just put this in the category of excessive gap on a real company. Sam, I don't know what you did yesterday on earnings, and I am praying for you that you're not getting whacked, because you gave me a couple levels that scared me. 320s. I was even considering the 300s, and I would be in deep pain had I done that. but there's some, that's a nasty gap. All right, T-Doc. That's a nasty gap. Wow, that's nasty. All right, I'm gonna put that in a window. And it's just that there's no pattern. I just call it excessive gap. Let's see where what happened in the first 30 minutes. A ring. I was considering a condor on this one, but chickened out. Would have worked beautifully had I done it. Nothing to do now. He and VX. 10-7 gap and right. This would be a condor idea if there's any juice out of the money. Hey, Caesar, I don't know if you got my joke earlier when I typed to you. Remember I said, what's wrong with your palace? And you didn't answer. This is what I was talking about. Caesar's palace. I said yesterday, if this thing opens flat, that's a monthly sell setup. It's a downtrend daily. That thing's in pain. Oscar gapping up. This would be a great 30-minute high. It's pulling in from the gap, so I'm going to set an alarm at 53. GPK. I only see one print, no pattern. And I've already gone through here and weeded out a bunch of stuff for time's sake. So if you see anything that I don't cover, just tell me. On Fang, we were looking to sell a call spread, but not enough juice. But under yesterday's low would be a call spread if it gives up this gap. There's an ugly gap, $77. I have no idea what to do with that. Toll, amazing bullish trading range, gapping up 108, but that looks like his all-time highs. Toll Brothers, they make luxury homes. They are doing very well. And do y'all remember all the talk? People are brainwashed into thinking if X, then Y. They're like, oh, interest rates go up, short housing. Well, what's a 30-year mortgage now? 7, and toll at all-time high. So, don't get too hung up on what they teach you in school. It's black and white. Matador. This I like. Daily, weekly, monthly. Maybe 30-minute high. We'll come back. Bullish, daily, weekly, monthly. No gap. If $75. Big ugly gap in the middle of no man's land. Now check I liked yesterday in the green room. And my alarm actually went off already. I had an alarm at 79 here. Big, beautiful bottoming pattern, daily, weekly. I'll put that in a window. CHK. ESI. Look at that gap. I don't need a percent. I don't need a percent column. Gapping down $2.50. That's over 10% gap. I don't see any prints though. We'll come back. Bottoming pattern. SPT, $60. No pattern. No gap. When I say no gap, I don't see any candlesticks, so I dismiss it. 141, nasty gap. I would like this to accelerate lower, maybe 135. VNOM to extended. GMed, made the term, but sloppy, no interest. Flowers up, but I don't see a gap. Neo, 1650, bullish gap, but need a pullback. BKD, And then this one, I said, if it opened flat, then I liked it long. And now it's gapping down, so that's messing it up unless it negates it. PSA, I posted this would be a great 30-minute high idea. This is a multi-week turn on the daily. Let's see, here's a great example for MT Live today. So this is just a microscope of this, but they both are have the identical function of a multi-week turn, which is a buy setup on the weekly. Now, the only thing that would make it better is if I didn't have this wall of resistance that it's gapping to. If this were more fluid down, I would be all over this for a 30-minute high, target 305. Do y'all follow everything I said there? SUI, bullish all time frames, but up a lot. No pattern. CE, I have an alarm up here, 152.50 would be a nice breakout candidate. Witter, we'll come back. Whiskey Kilo, I see one print at 88, which is bearish. Oh, Oscar alarm just went off, 53. Med. Now, if this is gapping down to 43, this could be a possible gap and snap candidate. I'm going to put that in a window. Uther alarm. There's a gap breakout, bottoming pattern, earnings, but it says therapeutics. All right, oh, Oscar. Yeah, so that is gapping up. Not a great void. SPNT, here's a continuation pattern with a gap. This is a little bear sandwich. So this looks good on a pullback, SPNT. I'll put it here. I have PanW on the other computer. Idea. This was a short idea, but down 3 bars now. Ample. Wow, that's a big old gap, but look how buyers stepped up out of the gate. That could be a 5-minute high. Day trade. A gap of trading range. A lazy boy. Okay, so this was pre-market print. I don't see any prints on the daily yet, but it is down. That's momentum is down big time. Quad, quad is bullish, daily, weekly, monthly. Daily, weekly, monthly look great. I'm gonna put that. Yeah, Don, it's because of the stupid spreads. Just give it a, that's why in my text I said we're probably gonna have to wait 5 minutes. Yeah, I didn't even look yet, but I got my order out at 20 cents. Our checkpoint is moving, so nothing to do there. Now let me put quad here. If this did not have this resistance over here, then I would say this thing can go to low 8s. So I'm not going to rush into it, but and Don, that's it disgusts me of these wide spreads because I would love to get out in the strength right there. But we're dealing with criminals. And so it's too complicated. I know. It's too complicated of a strategy when you got illiquid options, but your only other choice that I know of